Hello, welcome to due diligence summary report for LEU, Centrus Energy Corp. We're going to get into it. So just starting off on the website page here, let's go to our due diligence tab. Read this if you want. I'm not going to cover it. I'm just going to get right into our due diligence. This is the due diligence hub where I'm going to post all my DD reports. Basically, financial analysts mixed with Wall Street bets, just like a real kind of an amateur and a market enthusiast like myself, but someone who is striving to work in the markets. Once I get my qualifications, I'm currently doing a bachelor's degree in mathematics and statistics. I'm on my second year, so a bit of way to go, and I'm probably going for a master's after that. But anyway, I've been in the markets for a long time. It's my passion, it's my dream, and I do a lot of market research, and I thought, why not just share this with the world? And it's also going to look good to my future employer if I've already done my own financial analyst. That's kind of the rough plan here. You're probably wondering, what's the catch? Honestly, no catch. I'm sharing these reports to you, but if you like them, I've got a little donation link here. If you appreciate my reports, you like the work, or maybe you've made a bit of money from one of my stock picks, go ahead and donate if you want. I don't really need the money too much. I mean, I've got a decent job and what have you. Anyway, it's here. Okay, Centrus Energy Corp, DD Hub, scrolling down, clicking on this takes us to the full report. I've also got a couple little widgets here that I've done up. This just shows the stock's price action over the last year. It's up. Its high was about 500%. We'll get into that, and we'll get into its perhaps over evaluation as well. And I've also got down here, I just want to show full transparency. I personally bought the stock for the first recommended LEU, which is the ticker for Centrus Energy, on the 4th of September 2025. I got in at an entry price of 195.93. If you hang around to the end, I'm going to do a quick portfolio review. Where you'll see my live account where I'm not messing around. I actually do buy the things that I recommend. Okay, and I also posted on a previous YouTube video where I was doing a deep dive in the nuclear sector, trying to sift out what's maybe a potential investment in this play. I didn't find LEU in that video. I was looking at some SMR, small modular reactor stocks. We'll cover that in a second too. And I said, the quarter's still open. And then I went and done some research the next day, and I stumbled across LEU, and I then done a lot of research, and then I commented under that video and said, guys, I have actually gone long stock on LEU. And since I posted that comment, it's up about 25%. Actually, I should up that today because we did get a pullback last night. It's actually at 230 now, so probably around 20% or something like that. So I'm going to keep this updated. It's just kind of like a bragging right thing, like, oh, look at me, I recommended it at this date, whatever. Okay, so let's get into the report. I'm supposed to keep this video short. It's my second time filming this. The first one, I rambled on for 20 minutes about stuff that had nothing to do with this. If you've read this report, cool. If you haven't, I would recommend reading it. If you're just too lazy, I'm going to summarize things here, but there's so much information I'm probably going to skip over. So I'm just going to give you a broad, maybe 10-minute view of what I think about the stock LEU and why I think it could be a good play. I'm just going to go off the top of my head. I'll have a squiz down and make sure I don't forget. That's the old video, but I'm going to update it with this one. I have a squiz down and make sure I haven't forgotten anything. And basically, let's get started. So I've broken this due diligence report down to 4 parts. We've got part 1, the world needs more energy. So it's in the title. From the research I've conducted, I actually read the entire IEA Global Energy Review report, which was a lengthy report, and then just to give you a summary from the findings out of that report. So basically, as we know, the world's energy demand is increasing exponentially, meaning every year the demand goes up. You got data centers, you got the electrification of everything, electric cars and all that. So the energy requirement is increasing. Last year it jumped by 2.2% in 2024. It doesn't sound like much. That's actually twice the average pace of the last decade. So it's just going up further and further. So the power grid needs to produce more and more energy. Now, it reaches a point where there's signs that some energy sources are kind of plateauing. Fossil fuels seem to be plateauing with their output, according to this research. Gas is still doing fine, but coal is starting to slow down. Oil isn't used too much in energy production, but as we know, that does power our cars and vehicles and all that as well. So it's starting to plateau. Okay, then we've got renewables. We've got like solar, wind, and hydro power plants and all that, dams and all that. They're okay, but the problem with them is they're temperamental. And to show the temperamentalness, we balance that by the capacity factor. Capacity factor is like how long and can you run this energy facility, being coal, natural gas, or nuclear, up to 100%. For example, nuclear energy, you can have it running at full tit 93.5% of the time. But as you can imagine, if you look at the renewables on the right-hand side, solar's only 34.8% capacity factor. And that's obvious. It's because the wind comes and goes, doesn't it? It's not blowing full tit all the time. Same with solar. There's clouds. The sun's not going. Solar's the worst at 24.5% capacity factor. So nuclear just shits on all of them when you talk about capacity factor. Doesn't rely on the weather. Doesn't rely on anything. So long as you get that uranium in, you enriched uranium, and away you go. And this is just capacity factor of zero carbon energy. So nuclear produces no carbon. I mean, this report isn't about me trying to convince you that nuclear is good. It's really not. I'm just laying the foundation to then what leads into an investment opportunity. So the capacity factor, and why we're comparing it against wind and solar is, we're all about carbon-free energy sources, aren't we? Nuclear is carbon-free. So if we're going to compare carbon-free, look at this ginormous obvious gap. So nuclear, carbon-free, and the highest capacity. So it wins on two fields there. How efficient is nuclear? Well, I'm going to put this in perspective with you. One uranium fuel pellet. By the way, a uranium fuel pellet is the size of your fingertip. Generates as much energy as 1 ton of coal, 120 gallons of oil, 17,000 cubic feet of natural gas, and for solar, you would need roughly 5 full football fields covered in solar panels, running flat out for a year, just to match the output of a single pellet. Leave that there. Now, the only downside with nuclear, and it's not even really a huge downside, is the cost. So we've got cost, and how we measure cost when we talk about energy is, it's almost like an all-inclusive price. LCOE, which is levelized energy cost. It's basically all-inclusive. So for example, nuclear, we're including the cost of setting up the plant, which is the biggest cost. Some of these nuclear plants can take in $10, $20, $100 million to set up. And the time to build them, 10, 20 years sometimes, is ridiculous. So the all-inclusive cost, but once it's running, it's not that expensive. But the all-inclusive cost for nuclear is about 60 to 80 per megawatt hour. And all these include the upfront cost. So solar's low, wind's low, coal is between 70 and 120, which is higher than nuclear, which is surprising. Natural gas is somewhere in the middle. So the cost of nuclear per megawatt hour of power is kind of in the middle range. It's not stupidly high, and it's not terrible. It's not really, really cheap either. Now, the cost is planning to get cheaper in the future via the implementations of small modular reactors, which is described as, the way I can explain this to people, is an assembly line to mass produce a nuclear power plant. And I'm thinking of Lego, and it just clips onto the grid. It's very easy to set up. I know there's so much caveats to that, and it's nothing like that, but that's how I'm going to try and explain it. And it's higher technology, it's more efficient. It does take on more higher enriched uranium as well, which we'll get to. But the thing is, it's going to it should significantly reduce the setup costs. which is going to bring nuclear right down into the solar wind cost area. And at that point, it'll be almost unavoidable to go for more nuclear energy power plants globally. The elephant in the room is obviously the risk. We've all heard of nuclear meltdowns like Chernobyl, Fukushima, 3 Mile Island. They're actually pretty rare, and to show you pretty much as today's nuclear technology, it's near zero chance of there being a nuclear meltdown. Back in the day, in the 60s, 70s, and 80s, you used to have to rely manually on people to do the right thing, press the right button, shut down the plant, whatever. Now it's all automatic, like there's automatic safety shutdown systems, even if there's no power at all in a natural disaster. So they say it's near zero of there being any massive nuclear disasters. But look, Fukushima wasn't that long ago, 10 years maybe. But look, if we're going to weigh up the cost, right, the cost of life, we have death per units of electricity. I won't get into it too much, but nuclear is the lowest out of all the energy sources, with 0.03 deaths per terawatt hour of power, and that includes Chernobyl and Fukushima. To show you even more of how low it is compared to other power sources, even if you factor in every major nuclear accident in history, nuclear still kills fewer people per unit of energy than fossil fuels by orders of magnitude. Coal is about 800 times more deadlier than nuclear. Because coal, you've also got the whole underground mining and all that as well. And the geopolitics of nuclear, you don't see much of this on mainstream media or even on social media because it's quite a touchy subject. But if you dig around, a lot of countries are like starting to get back into nuclear energy. Just read through this report here that I've posted up here. I mean, there's heaps of countries that have committed to increasing its nuclear power, and there's countries that have outlawed nuclear for 50 years that are going back to it. And I think this is a trend that's just going to happen. We're going to be forced as a society into nuclear energy, whether we like it or not. And it's just simply because it's the most efficient energy source. I don't fucking care if we do or don't. I'm here just to try to make money. So I need to make an inference from what I think is going to happen in the future to how I'm going to invest now. That's all. I mean, I'm not for or against it. I really don't care. This is just my thesis on why I'm trying to make money. Okay, so flying through now. Okay, so what's the play? Knowing that in mind. Okay, so let's rule out a few things. So there's a few plays. If you think nuclear energy is going to be big in the future, or it's just going to increase gradually. Well, I've broken down into 5 possible stock plays, like subcategories within nuclear power, within the demand for nuclear power increasing. So let's refresh our brains. Our thesis: we believe that the demand for nuclear energy is going to increase in future times. Yearly, it's just going to continue to increase. Okay, our thesis is on the table. And if you believe that, if you don't believe that, don't invest in the nuclear space. If you do believe that, let's look at how we can profit from this. I've figured out 5 subcategories if you believe in this thesis, starting with uranium miners. And then we've got uranium enrichment nuclear fuel companies. We've got nuclear power plant operators and utilities. We've got component and engineering suppliers, and we've got small modular reactors, which is the new wave of nuclear. It's like future, where nuclear energy is going to go in the future. Now, I'm going to roll these out, but please have a detailed read. Uranium miners, not for me. I just think they're too speculative, and some of the biggest uranium ore deposits in the world are owned by, say, BHP. Like BHP in my home country, they own Olympic Dam, which is the largest uranium deposit on Earth. Look at BHP's share price, the same as it was in 2008. The reason is simple. A lot of these big mining companies are so diversified. They don't just do uranium, they do every other resource. So when one resource goes up, like gold, base minerals might go down and they're left flat. So it's just tough to find a good uranium miner play. Now, if you were to find a stock that only mines uranium, cool. However, another caveat, uranium's not actually that rare. It's one of the more common resources on Earth. So if it's not that rare, as soon as the demand for nuclear and uranium increases, you're just going to get a lot of other mining companies come up and start to mine uranium, which then brings down the uranium price again. Not for me personally. I do actually work in the mining industry too, so I know a lot of the inside scoop on mining companies, but I just don't like investing in mining companies. Personal preference. Uranium enrichment, well, that's the investment we're going to make. That's what the stock ticker LEU is. But first, why don't I go for nuclear power plant companies? These are just utility companies in a way. Utilities, good dividends, steady, you might get steady growth, fine. But I'm looking for something a bit more aggressive. Component and engineering supplies. These are the people building and maintaining reactors. Not a bad play. I didn't really do much research in this field. You could have a dig around and try find, but that's going to be good if the nuclear energy demand kicks off, because everyone needs engineering supplies and building and maintenance. But looking for something with more exponential returns. SMR, small modular reactors, good play, but the only thing that kind of put me off is it's quite a skeptical play, this one. And if I didn't find LEU, I probably just would have honestly brought a SMR stock. But it is quite speculative. These are quite in prototype, pre-production, pre-revenue, and all that stuff. Not for me. So I decided to go for try finding a uranium enrichment or a nuclear fuel company. So let's skip here. Just going to scroll down. So this is the uranium enrichment process, and it's these big centrifuges, and they spin and they separate the molecules within the uranium. I think you got U-235, U-238. I thought there was a third one, and basically you're trying to separate them because you want a concentration of U-235. So you got to separate the uranium isotopes. Oh man, if there is ever a nuclear physicist watching this video, I apologize so much. I've got a rough understanding of how it works. But you're trying to separate them and collect more of the uranium isotope that you do want, and so you can enrich the uranium, if that makes any sense. Okay, so there's two types of uranium. There's low enriched, which is 3 to 5%. Now, low enriched is what the current and past nuclear power plants have all run on LEU, low enriched uranium. The future of nuclear power plants is going to be taking HALEU, high assay low enriched uranium, which is uranium that's enriched up to about 20%. Remember that. That's going to go on the SMRs once they're up and running. I want to cover some points, and I'm going to give a unprofessional summary of what I think. I want to get to this as well. LEU, fine. The board members, fine. I didn't find anything wrong with their board members. They all seem to come from strong background. A mixture of people who were in the government, the US government that is, Department of Energy, and nuclear scientists, nuclear engineers, which is kind of what you're after. So nothing wrong with that. Their finances, they've been profitable for the last 3 years. But what I did, profitable, they have 800 million in cash, I'm pretty sure, and about 400 million in debt, which isn't a bad position to be in because you got more cash and debt. That's fine. Okay, the valuation of the company is quite overpriced. I think they're trading at a 30x earnings or something like that, which is high. Yeah, 30 to 40 times earnings, which is high. Now, the reason it's high is the stock's obviously gone up over 500% in the last year, which is something. It just seems that there's investors that, when you have a high earnings, investors are pricing in future earnings, meaning they're trying to price in where they think that stock's going to be in the future, hence it's extravagant evaluation. Now, it can still go up a lot more, or we're buying at the top because the future is all priced in. Both options are fine. That's the only thing with doing this research that I found was kind of okay, this could be quite risky, is the risk that we're late and a lot of this stuff is already priced in. So even if what the company's goals are met in the future, the stock doesn't react that positively. It kind of trades sideways because it's already been priced in today. That's the risk when you see things that are quite overvaluated. So we'll remember that. Anything important before I give you... All right, let me just give it to you straight. The United States government stopped enriching their own uranium completely in 2013. Now, they started phasing that out in late 90s, early 2000s. Fun fact, the United States used to enrich its own uranium so much that they had an oversupply, and they actually used to sell it to countries abroad. For whatever reason, I don't know why, maybe it became less profitable, I'm not sure, the US government started to phase out all of its uranium enrichment plants until it got to pretty much zero in 2013 when the last plant shut down. We were zero enrichment for about 10 years. Now in 2023, 2024, there was a bit of a panic within the United States government. Now the panic is the next generation of nuclear reactors, specifically the small modular reactors, SMRs, they require uranium rich to a high capacity, up to 20%, okay? At the moment, the current plants only require up to 5%, which is fine. The problem is once you reach 20%, after 20%, 20% and upwards, you can get into weapons grade uranium enrichment, which means they can start to be used for nuclear weapons above 20%. I don't know the ins and outs of nuclear weapons, but I know that that's like a cutoff point that's been agreed upon with all the countries around the world. That's when it becomes a problem. All right. So you think about the US's position here. They're getting the enriched uranium brought into the country. They're buying it abroad. They don't make it themselves. Now imagine a scenario where, fast forward 10, 20 years, new generation reactors come online. We require an abundance of high assay enriched uranium. Again, uranium enriched up to 20%. Can the US trust foreign countries to make enriched uranium, which is enriched nice and close to the cutoff of where nuclear weapons come in? Because the problem with that is you're asking them to buy almost weapons grade enriched uranium. You don't know what else that country is then going to do with all the other. They're now enriching weapons grade uranium is what I'm getting to. And the US is buying it. So that has caused a panic in the US government to quickly start enriching uranium in-house. There's one company and owning one company that's doing it, which is Centrus Energy, LEU. They're the only one enriching uranium. Should I say preparing to enrich uranium? Because here's the caveat. Their plan is to enrich low enriched uranium and fuel the United States' current existing power plants and also enrich high assay enriched uranium. Now, they have a plant and they've officially enriched high assay uranium at 20% on a bulk scale. I think they produced 900 kilograms in a demonstration they've recently done. But they haven't sold any of that yet because there's no SMRs online yet. And they're in the process of rebuilding the low enriched uranium to feed the current plants. Now here's why I think the catalyst lies, is the rush to enrich the United States' own uranium in-house. Also, if SMRs come online, there's only one player in town, which may create some sort of like bottleneck for LEU. And it means we don't have to bet on the right SMR stock. We just have to bet where they're going to get their fuel from, which is LEU. Because that way we don't have to pick a winner. We just have to pick a player where they all have to funnel through and get their nuclear fuel. And that's the real thesis behind why I think this may be a good investment. Now, some caveats is it could be over-evaluated as it stands, not too sure. Anyway, and also it's still very speculative, right? They technically haven't sold a single product yet, but they are profitable. The reason why they're profitable is they've been funding their project by this little side business called being a uranium enrichment dealer. I found crazy when I was doing a deep dive into this. So they're like a middleman dealing uranium, enriched uranium, which is a little bit more sketchier than just straight uranium. So they're buying it abroad and they're selling it in the US and they're taking a cut. To why the US power plants don't just go straight to the supplier and they use LEU as a middleman, I have no idea. But they've been making a quite little nice penny through that, which has pushed them into profit for the last 3 years. And they've been making money, and which has been funding their starting up of all the enrichment plants, which is great for us as shareholders. And the reason why it's great is normally when companies are in these sort of getting back up and running or startup phases, they either A, dilute shareholders by selling off more shares, or B, get into more debt. So I'm all for this side hustle they've got going on. I'm all for it. And they also do make a bit of money on uranium enrichment advisory services and other technical things as well. I think 25% of their revenue is coming from that, which is another little good side thing. So yeah, we'll wrap it up there. But do have a good read of this. I've put way more detail than what I've said. I've given the absolute worst. When would I sell was a good question, actually. For every investment I make, I always have a hard stop. Generally, it sits around 20% or 30%. Now, I know probably what you're thinking is like, why even set a stop loss? Well, actually, I don't. But I will exit the trade. I'm quite disciplined of this. If the share price drops by a certain percentage point. For this, I'm in the 30 to 50% range. It's quite volatile because the stock's quite low afloat and it's like 75% institutional holders. There's not much shares to go around, so the stock can swing. So I'm willing to set that stop loss a bit lower. But what I've learned in investing is you never want to fall in love with a stock. No matter how much research you've done, look, if the share price is down by 50%, you might have missed something, man. And sometimes the crowd is right and you're wrong. So drops by 30, I'm out. I'm looking for the next investment. I'm going to keep it nice and simple. If it does drop by 30%, I guarantee you it's not a mistake. That's a decent enough drop where sentiment has changed, something's happened, or what have you. Okay, things to watch if you are invested in this stock is look at the SMR market. You want to see advancements in that, because if the SMR market and SMR stocks continue to develop and they get closer and closer to coming online, they're going to need high assay, low enriched uranium, and they're going to use LEU. And that is a big first play. If you do get an SMR online and they use this fuel, that's a massive thing for the stock. So keep an eye on that. But I really want to see from this company, LEU, is I do want to see them get their LEU, low enriched uranium, back online, back up and running, and get their first customers in. They've got a lot of contracts already lined up as well, and they get a lot of grants from the government, and them and the government are just completely merged by the looks of their board members, which is fine. And by the way, they're kind of bipartisan because they did get a lot of these contracts in the Biden administration. They're still getting some in the Trump administration. So I don't think there's a risk there, bipartisan risk or political risk. Okay, well, we'll leave it at that. Hopefully you enjoyed this video, but go ahead and read the report. That's done with the summary. I'll give you a quick portfolio update. Give me 2 seconds. Sorry, guys. Okay, hang around if you want to do a portfolio update. Just want to drag my login to the other screen so you can't see my login details. The reason why I do this is just logging in, guys. Sorry. The reason I show one of my live accounts is I want this business, if you can call it, to be completely transparent, right? So I want to show you not a demo account. I want to show you a live account, skin I have in the game. So we feel the pinch together, but we can also celebrate together. Now, before I show you my account, let's just bring it up. This is a separate account. This isn't my main investment account. I created this account just for this channel. But it originally started off with This specific account, I started off with, I've told the story before, so I'm just going to skim through it. $2,500, no, it was an $1,800 ounce of gold. I then sold that, invested in a couple of stocks or whatever. I started actively trading around this time this year, around sort of here. And I started this challenge around here. And this challenge is, the title of my other video was, can I turn $2,500 to $1 million? But look, let's be honest, that is just a clickbait title. I'm going to level with you guys. I'm just trying to get some attention here. But basically, yeah, this is my account. This is my slush fund account. This is the account I'm always going to share with you guys. It's a live account, as you can see. Let's have a look. This percentage thing isn't right because I made a withdrawal back in 2023 and put the money back in. So that's not right. But if you go to 1 year, we've had a decent increase. But let's go to the performance. So far, over the last year, I'm up 116%. Year to date, I'm up 86%. Month to date, I'm up 19%. 7 days, I'm up 6%. So across all metrics, we're doing well. And if we want to compare to the S&P 500, for example, smoking it. So none of this virgin fund ETF stuff where you're like, oh, invested at 9% APF and all this stuff. You know, we're traders, right? We're investors. We don't care. We just enjoy investing. That's me. So we're doing well, man. We're doing well. The account's doing well. We're up big time. We started at $2,500 and we're up to almost $12,400. Let's look at our positions. Okay, LEU. Oh, LEU's up a little bit today. So don't laugh at my position size. It's only 6 shares, and I wrote this massive ass report. I would have gone with more, but I'll tell you why. Main reason is I had no money because I went in on leverage on Reddit, but Reddit paid off. Reddit is up 74% return so far, and basically I had no money, but Reddit went up so much that I've then used that margin. I'm margined out. I'm about 2 times leverage. But this is kind of I don't care if I lose this money. This goes hand in hand with this channel. Take that back. I'd be very sad if I lost this money, but it's not. Just put it this way, I've accepted the loss. So I'm investing chaotically. I'm taking risk that I don't think everyone should take. And I'm using margin, all right? So let's keep that in mind. By the way, so I didn't even have, so I'm trying to keep at least a certain percentage of maintenance margin left in my account. Because if I start continuing to dig into margin, if my account takes a 25% loss, I can actually lose everything in this account. So I didn't even have any money to begin with, but I wrote this report and I was like, I have to get in. So I only bought a couple shares. I only bought 6, which is still $14,000 US dollar position, which is about a 2,000 Australian dollar position. So it's still some skin. But I want to grow this account so I can really go in on positions. And if LEU drops some more, I might double down, but let's see. But this is just my proof that I am invested. I did buy shares, like I said, and so far my LEU position is up by 20%. And other stocks are doing well. The only one that's not performing for me is AMD. Spire, just buying every dip. Apple, I thought Apple was unfairly undervalued. Can't believe I'm calling Apple undervalued at some point, so I brought that. But some of these deserve its own video on themselves. UNH, I love bragging about this. Look, I only own 4 shares, but I'm up by 40%. Oh, the reason I love bragging about this is, you see this blue line? That's my entry point. That's a sniper entry point. I might be the only person since the COVID crash 5 years ago with that sort of low entry point. That if buy the dip was a poster, it's this. I'm so proud of this. And I'm so it's so embarrassing it's owning 4 shares. But look, it's $400 profits, not bad. Yeah. About a 2,000 Australian dollar position. Yeah. Anyway, I just like, I love bragging about this. Just buy the dip entry point. All right. I think we'll leave the video there. I can't wait for AMD to please turn a profit. It's the only thing holding back my portfolio. Yeah, I'll break down any of these investments if you want. Reddit is massive for me. If that's 3,000 US, that's over 5,000 Australian. And yeah, the account's pumping. We're up. We've 3x'd our money so far. We've gone from 2.5 to 5, 5 to 10. So we've doubled. We've done 2 doublings. I think 10 doublings is a million, from around there, depending from where you start. I've done 2. All right, we'll leave it there. All right, thanks for watching, everyone.